Welcome back to Stocks and Trades channel. We provide easy to digest information in short videos about stock market investing, personal finance, money saving, and building wealth. Our content is designed to help you achieve financial freedom sooner. Today's video will provide news, insight, and investment suggestions on the week ahead. We'll analyze 2+1 stocks to watch this week and some others that will be volatile. So, let's begin. Disclaimer. All trading involves risk. Only risk capital you are prepared to lose. Past performance is not an indication of future results. This content is for educational or entertainment purposes only and is not investment advice. The S&P 500 and the Nasdaq both rose around 2% for the week while the Dow posted a 0.3% gain. Although those results fell far short of the Nasdaq's 8.2% surge in the previous week, they marked the second positive week in a row for stocks despite growing expectations of steep interest rate increases ahead. Many companies are scaling back their expectations heading into earnings season, which begins in mid-April. As of Friday, more than twice as many companies had reduced their earnings guidance than had raised their forecasts. Of the 95 companies in the S&P 500 that have changed their guidance, 66 cut expectations versus 29 that lifted them. After modestly retreating the previous week, the price of U.S. crude oil rose about 10%, climbing to around $113 on Friday. As recently as March 7, oil traded as high as $130, only to sink below $100 a week later. Our first stock type is dividend earning stocks. These are a great way to earn passive income. This week's suggestion is Fidelity National Financial, with ticker symbol FNF. Fidelity National Financial Incorporated, together with its subsidiaries, provides various insurance products in the United States. The company operates through title, F&G, and corporate and other segments. It offers title insurance, escrow, and other title-related services, including trust activities, trustee sales guarantees, recordings and reconveyances, and home warranty insurance. The company also provides technology and transaction services to the real estate and mortgage industries, and mortgage transaction services, including title-related services and facilitation of production and management of mortgage loans. In addition, it offers annuity and life insurance products, such as deferred annuities that include fixed-indexed, fixed-rate, and immediate annuities, as well as indexed universal life insurance products. Further, the company engages in the real estate brokerage business. The company was founded in 1847 and is headquartered in Jacksonville, Florida. Michael Nolan has been the Chief Executive Officer of Fidelity National Financial since February 2022. Some technical analysis data shows that Fidelity National Financial's return on equity is 27.1%, its average volume is about 2.19 million, its market cap is $14.28 billion, its beta is 1.36, its PE ratio is 5.97. Its PEG ratio is 10.83 and its EPS is $8.44. Our rating is 9 and we consider this stock as a strong buy. Based on experienced analysts offering 12-month price targets for Fidelity National Financial in the last 3 months, the average price target is $70.79, with a high estimate of $78.75 and a low estimate of $63.63. With current price at $50.35, this would mean almost 40.6% average profit over the next year. Fidelity National Financial pays an annual dividend of $1.64, which amounts to a dividend yield of 3.26% and a dividend growth of 22.22%. The ex-dividend date forecast is the 15th of June, so buying a Fidelity National Financial stock by then will pay you 44 cents on 30th June. Fidelity National has a leading market share in the residential purchase, refinance, and commercial markets. Thus, this nation's largest title insurance and settlement services company remains well poised to benefit from the improving U.S. real estate market. The acquisition of F&G Annuities and Life, a leading provider of annuity and life insurance concentrated in the middle-income market, provides Fidelity National a diversified growth strategy and a breather from the volatility integral to the core title insurance business. This title insurer should continue to witness momentum in refinance volumes, strong purchase demand and rebound in commercial real estate activity. The market-leading position offers scale and competitive advantage by fueling revenues and lowering costs. FNF has been delivering industry-leading margins. Fidelity National has a solid balance sheet that supports effective capital deployment including dividend, share buyback, mergers and acquisitions, organic growth initiative and debt payment. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Our second stock type is growth stocks. A growth stock is a share in a business that's shown above average earnings and has the potential to grow faster than the overall economy. This week's suggestion is Mercado Libre, with ticker symbol MELI. Mercado Libre Incorporated operates online commerce platforms in Latin America. It operates Mercado Libre Marketplace, an automated online commerce platform that enables businesses, merchants, and individuals to list merchandise and conduct sales and purchases online, and Mercado Pago FinTech, a financial technology solution platform, which facilitates transactions on and off its marketplaces by providing a mechanism that allows its users to send and receive payments online, as well as allows users to transfer money through their websites or on the apps. The company also offers Mercado Fondo that allows users to invest funds deposited in their Mercado Pago accounts, Mercado Credito, which extends loans to certain merchants and consumers, and Mercado Envios logistics solution that enables sellers on its platform to utilize third-party carriers and other logistics service providers, as well as fulfillment and warehousing services for sellers. In addition, it provides Mercado Libre Classifieds, an online classified listing service, where users can list and purchase motor vehicles, real estate, and services, Mercado Libre Ads, an advertising platform, which enables large retailers and brands to promote their products and services on the internet, and Mercado Shops, an online storefront solution that enables users to set up, manage, and promote their own digital stores. The company was founded in 1999 and is headquartered in Buenos Aires, Argentina. Marcos Galperin is the co-founder, chairman, president and chief executive officer of Mercado Libre. Some technical analysis data shows that Mercado Libre return on equity is 19.5%, its average volume is about 733,000, its market cap is $58.81 billion, its beta is 1.51, its PE ratio is 698.4, its PEG ratio is 1.96, its EPS is $1.67 and its asset growth is 54.78%. Our rating is 8 and we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for Mercado Libre in the last 3 months, the average price target is $1,654, with a high estimate of $2,138 and a low estimate of $1,111. With current price at $1,166.33, this would mean about 41.8% average profit over the next year. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Our third stock type is blue chip stocks. These are typically large, well-established and financially sound companies that have operated for many years and that have dependable earnings, often paying dividends to investors. This week's suggestion is Pfizer, with ticker symbol PFE. Pfizer Incorporated discovers, develops, manufactures, markets, distributes, and sells biopharmaceutical products worldwide. It offers medicines and vaccines in various therapeutic areas, including cardiovascular, metabolic and women's health under the Premarin family and Eliquis brands, biologics, small molecules, immunotherapies, and biosimilars under the Ibrance, Xtandi, Sutent, Unlita, Retacrit, Lorbrena, and Braftovi brands, and sterile injectable and anti-infective medicines, and oral COVID-19 treatment under the Sulperazon, Medrol, Zavista, Zithromax, Vfend, Panziga, and Paxlovid brands. The company also provides medicines and vaccines in various therapeutic areas, such as pneumococcal disease, meningococcal disease, tick-borne encephalitis, and COVID-19 under the Comirnaty, Nimenrix, FSME, Tremenba, and the Prevnar family brands, biosimilars for chronic immune and inflammatory diseases under the Xeljanz, Enbrel, Inflectra, Eucrisa, and Sibinco brands, and amyloidosis, hemophilia, and endocrine diseases under the Vyndaqel, Benefix, and Genotropin brands. In addition, the company is involved in the contract manufacturing business. It serves wholesalers, retailers, hospitals, clinics, government agencies, pharmacies, and individual provider offices, as well as disease control and prevention centers. The company was founded in 1849 and is headquartered in New York. Albert Bourla has been serving as Pfizer's chairman and chief executive officer since January 2019. Some technical analysis data shows that Pfizer's return on equity is 30.2%, its average volume is about 34.4 million, its market cap is $298.09 billion, its beta is 0.71, its PE ratio is 13.69, its PEG ratio is 1.17, its EPS is $3.85, and its return on capital is 24.7%. Our rating is 10 and we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for Pfizer in the last 3 months, the average price target is $61.05, with a high estimate of $79.80 and a low estimate of $46.46. With current price at $52.78, this implies a 15.67% upside potential over the next year. Pfizer's coronavirus tailwind isn't over. The company expects to generate roughly $32 billion in revenue from Comirnaty this year and an additional $22 billion from Paxlovid. Thanks to these products, the company should exceed the ridiculously high bar it set last year. The drug maker expects revenue between $98 billion and $102 billion for 2022, which would represent a year-over-year increase of 23% at the midpoint. Perhaps Pfizer's revenue will eventually fall off a cliff as the pandemic subsides. Still, investors shouldn't overlook the impact both Comirnaty and Paxlovid are having on its ability to replenish its lineup and its pipeline and build a solid foundation to support growth for many years to come. Let's also not forget about the company's dividend profile. It currently offers an above-average yield of 3% and a very conservative cash payout ratio of 29%. With the cash flow it is generating, Pfizer is more than capable of sustaining further dividend increases. That means the company is an excellent option for income-oriented investors, too. Pfizer offers growth, value, and dividends, and that's what makes it one of the more attractive pharma giants right now. Investors focused on the long game can't go wrong with this company. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Next week, many companies are going to release their earnings reports, which is one of the most potentially volatile times of the year for equities, and if we are not careful enough, we could put our entire portfolio at risk. Companies may announce earnings or losses and stock prices may go up or down significantly. For this reason, we suggest that you avoid or carefully consider opening a position for the following stocks during next week, and wait to evaluate the earnings announcement before deciding to invest. Xiaopeng, Jefferies Financial Group and TPG will release earnings on Monday 28 March. Tuesday 29 March will be the most popular day of the week as Micron Technology, Lululemon Athletica, Chewy, and China Southern Airlines among others will release their earnings on this day. Paychex, Exelon, BioNTech, and UiPath will release earnings on Wednesday 30 March. Walgreens Boots Alliance and BlackBerry will release earnings on Thursday 31 March. Finally, Nutraband will release earnings on Friday 1 April. Watch these stocks' prices carefully and think twice before making any decision. Next week will not be that popular among dividend stocks, but we have some interesting options to suggest. Monday 28 March is the ex-dividend date for Medifast and ABB. Tuesday 29 March is the ex-dividend date for Vail Resorts and Guess. Wednesday 30 March will be the most popular day of the week and is the ex-dividend date for Innovative Industrial Properties, W. P. Carey, and John Deere. Thursday 31 March is the ex-dividend date for Realty Income Corporation, Ralph Lauren Corporation and Bristol-Myers Squibb. Finally, Friday 1 April is the ex-dividend date for Main Street Capital Corporation and Globe Life. Be sure to buy any of the above stocks before the market closing of the ex-dividends date previous day to benefit from the dividend payment. If you find this video useful, please like it, leave your comment below, share to a friend and subscribe to our channel. See you next time.